Alô, alô, alô.
Alô, Gabriel? Me escuta, Gabriel? Gabriel? Alô?
Me escutando, Rodrigo?
Testando aqui, ó. Me escuta, Gabriel? Kleber, me escuta?
Escuto. Bom dia.
Eu acho que é o Gabriel que está com problema de som lá, então. Ele não está escutando.
Acho que
Agora eu estou ouvindo aqui.
Gabriel, está escutando?
Agora sim.
Bom dia.
Bom dia.
Vocês me escutam bem?
alto e claro.
Ótimo.
Quem passa a apresentação?
Eu passo.
Tá.
Eu acho que eu...
E aí é igual sempre, né? Em inglês e daí vai ter o link, a versão em português, né? Para quem quiser assistir com tradução simultânea.
Isso. Mesma coisa.
Maravilha.
Eu tô nessa versão webinar aqui, mas eu acho que já tá liberado. O pessoal já liberou aqui, porque não tem razão. Eu tô aprendendo a mexer.
O pessoal tá na sala de espera, né?
Não, acho que já liberou. Tô tudo aqui.
Eu preciso fazer isso aqui, toda a apresentação com perguntas e respostas em meia hora. Então, eu vou tocar um pouco mais rápido aqui.
Okay. Good morning, everyone. Welcome to first quarter 2022 webcast from AURA. We have like the presentation and the results are already available on our website. We have it in here. After the presentation, you'll be able to post your questions through the Q&A panel from Zoom, and we'll be responding accordingly. We have together with us Rodrigo Barbosa, CEO, and Kleber Cardoso, CFO, who will be leading the presentation today. Rodrigo, the floor is yours.
Thank you very much, Gabriel, and I'm glad to be here, and thank you all for attending this call. Gabriel, I cannot see the presentation. Are you sharing the screen? I think we should share with all the audience. Yes. So I'll go on the first slides as usual, and then giving the whole context of the quarter and how we evolved in many different areas. And then Kleber, our CFO, is going to go through the results specifically from revenues, EBITDA, and also the profits. Next slide, Gabriel. So in terms of overall during the year, we had a very strong results coming from a combination of few factors. We had a sales higher than the production, although the production was slightly lower than the last quarter. The sales, we had inventory from the Q4 2021 that we sold now on Q1. So that combination of these plus, and perhaps more importantly, the management has been also able to counterattack or to mitigate inflationary pressures. So we did not see on our cost significant increase on coming from inflation. The increasing cost that we had was because due to the mine sequencing, we had lower grades in EPP and lower recoveries in San Andres. So that is what drove the cost a little bit higher, but not inflation. So as we move forward to a higher production, mostly on the second semester, then we will also see the costs going down and offset this increase coming in the first semester. We had a very strong production again in San Andres, in Aranzazu. That is the increase in capacity that we did during last year, plus more efficiency gains and good grades and good recoveries also. That also somehow offset a lower production coming from EPP and San Andres. So a combination of all these initiatives of sales over production, mitigation of inflation. We had an EBITDA reported at $49 million, and then maintaining the level 185, last quarter 182 of the last 12 trailing 12 months. In terms of cash, as we continue to generate cash in our operations, and despite all the dividends that we paid last year, we finished the quarter with $194 million and a negative net debt of $29 million, still including the debt from Gold Road that should be unplugged from our balance sheet soon. Very important other initiative that we moved forward during the quarter was the continue on schedule, the construction of Almas. We are already 32% the project completely. Most of the engineering and the purchases has already been negotiated. Now 59% of the budget has already been negotiated. Another 20% should be signed very soon. So that mitigates what we've been seeing in many different projects, significant capex increase because of inflation. We've been able to mitigate most of these in our internal management initiatives. Another important step that we did, we do not speculate on gold price if it goes up or down. So we normally don't do hedges, but to guarantee cash flows of projects that have been built, we do practice hedges. As I will remind Almas, the payback is 2 years. And what we did is a put and call collars in order to guarantee the payback of this project at the minimum levels that Kleber can go in more details later on. So now 80% of the first 2 years of production of Almas has been hedged through collars that goes from the range 16 to 1700 on the puts and calls above 2200. So that gives us a guarantee of the cash flows of the first 2 years, which is the necessary for the payback of the full investment. Another important milestone that we achieved is Matupá. As I mentioned last year, we were working on having the plant designed and the 43-101 on X1 so that we could enter in licensing of this project and then move forward into construction next year. Although the life of mine was 6 years only with the X1 deposit, we said, let's put this into production as fast as we can. The payback is being 2 years, so we don't need to be further than 6 years, while we will still have significant opportunities to increase resource and reserves along with, at the same time that we built the Matupá. And what happened was we started drilling last year on a 10-kilometer alteration at Serrinhas with 10 different targets. The first 2 targets that we started to drill, we got interception of 80 meters at 3.89 grams per ton and 59 meters at 3.14 grams per ton. This opens a completely new perspective for Matupá that initially already had 70% internal rate of return leveraged. If we add more resources reserves, that this return is going to be significantly higher if we continue to have positive results. We also announced acquisition of a Big River. It's a company, Australian listed company that has a project in Brazil, and that a combination of Almas, Matupá, and Big River can put us on the path of 500,000 ounces in the next 3 years. So we are growing until 400,000. The current production plus Almas and Matupá will put us on the 400,000 ounces. And Big River can put us on the path to 500,000 ounces in the country that we understand and we are very comfortable with the jurisdiction. We continue on the finance side. We continue to reduce our cost of financing. We raised a new credit lines of $20 million with cost of 3.70% and 4.99% below our average cost. So we continue to reduce our cost of capital in order to fund our projects, leveraging even higher the returns of those projects. On ESG, very important, we also, although we are already at low levels of carbon emissions, so one of at the low end on the average, we assumed a compromise to have a reduction of 5% by 2023. Gabriel? So that's an overall of the quarter. In terms of safety, we registered 2 lost time injury in employees in Apoena, not severe, Apoena and Honduras. So we target 0 accidents, but we already work on under the average of the sector. Nevertheless, we continue to reinforce all our procedures internally to make it more visible and to make bring more conscience of safety to all employees so that we can reach it. 0 accident targets overall the company. Aranzazu, we did not have any injury this year. Almas construction, we also didn't have any injuries. And we, as I mentioned, we continue to improve our standards in order to bring more awareness of safety to our employees and guarantee that we provide the safe environment for everyone that is working with us. In terms of the pandemic and COVID, as you've been able to see all across different countries and also industries, we saw significant reduction on case. We continue to monitor, we continue to test and implement our initiatives, but we don't see, we see actually a significant decrease on the cases, and we had no impact over our production because of the COVID. In terms of technical structures, the dams, waste dams, heap leach and underground, we continue to improve our controls. We have online system implemented now to control the dams also in Brazil, and all of our technical, all of our structures has been monitored as the best practice internationally. We have independent auditors, the safety committee that is monitoring constantly all those structures, and we have no information of any problem in any of them. So as I mentioned, in terms of production, we had a quarter that we produced 61,000 ounces. This is lower than the last quarter of 2021. And on mining, as most of you know, and especially gold and copper, you have ups and downs according to the mine sequencing. Sometimes you reach higher grades and higher recovery areas. Other times you reach lower grades and lower recovery. So as we expected, we knew that at the beginning of this year, first quarter and second quarter would be weaker than Q3 and Q4 this year. So we should see an increase in production along the second semester. We maintain our guidance to be between 260 and 290,000 ounces for the year. And the last 12 months in production, we had the 257,000 ounces. We saw a decrease in EPP, mostly in EPP, and again to lower grades. So we continue to push back the pit of Ernesto, and that we will reach higher grades of Ernesto during the second semester, and we'll see then the production coming up as we did during 2 years in the past. Aranzazu continued to perform very well, very stable production. We increased the capacity. We are reaching good grades and good recovery. Management has also been able to execute small actions to increase the productivity on the daily basis. In San Andres, as we also expected, we had a decrease on recoveries with a more mixed ore, oxides and a little bit of sulfides that decrease a little bit the recoveries. And we expect to recover and to have a bigger production also during the second semester. In terms of cash cost, as I mentioned to you, we had an increase compared to last quarter. Those increases came from the lower production, lower grade or recoveries, not from inflationary pressures. So as we then move forward to a higher production during the second semester, you should see then the cost of or the cash cost decreasing in our balance sheet in our results. We reached $818 per ounce. Our guidance is between 771 and 856 is within the guidance, understanding that we expect this during the second semester to have a lower cash cost once we reach higher production. As I was mentioning, I would highlight the 2 projects that we are now developing, almost in construction. We had 0 accidents. We already have more than 400 employees. We are overall 32% accomplished. So we have 100% of the permits, 96% of the engineer package completed. Procurement of 49% already signed. Another 20%, as I mentioned, to be signed very soon already with the price negotiated on contracts only. And construction 10% completed according to our schedule. As you see, we have the administrative offices on the top, and on the bottom, the civil works at the mill, which is the most important engineering work that we are doing right now, and that will guarantee the production to start during the first semester next year, and then commercial production during the second semester next year. Gabriel. On Matupá, we are in parallel of doing the licensing. We released the PEA of this project late last year with a 70% internal rate of return leveraged in only 6 years of life of mine. It's a shorter life of mine, but that's because we decided instead of extending too much the life of mine before building, let's build the project. The payback is already guaranteed with the 2 years, with the current life of mine 7 years, while we do in parallel more exploration in order to increase resource and reserves. So what happened, as I mentioned, we had a significant interception on the first 2 targets in Serrinhas. That opens, as I was mentioning at the beginning, a very different perspective for this project that go significantly higher of the 70% internal rate of return, as if we confirm those deposits to be added on the X1.
Thank you, Rodrigo.
Thank you.
Thank you, Rodrigo. Good morning, everyone. Thanks for having us here this morning. On the next page, I'm going to go over a summary of the main financial results for the first quarter of the year. So on this page, as we use to bring in and share with you, we have a summary of the main financial KPIs for the quarter, for the very few previous quarters and accumulated last 12 months for each reporting period. As you can see, net revenues achieved $112 million during the first quarter of the year, bringing the last 12-month revenues to $441 million at the end of March. As we can see, both the number for the quarter and accumulated for the last 12 months almost consistent, a slight decrease compared to Q4. As Rodrigo was mentioning, there was a reduction in inventory during the first quarter of the year, so we saw the benefits in the revenues and the EBITDA. In terms of adjusted EBITDA, Aura is reporting adjusted EBITDA of $49 million in this first quarter of the year, coming from $56 million on the previous quarter. But just as a reminder, was the highest adjusted EBITDA in the history of the company, Q4 2021. When we look into the last 12 months results, we see an accumulated EBITDA of $182 million in the first quarter of 2022. And we see a kind of stability for that indicator for the last 4 quarters. So for 4 quarters in a row, Aura Minerals has reported annualized EBITDA above $180 million. In terms of net income, positive net income of $39 million in this first quarter of the year as results from operations, but also an important FX gain of $12 million that is related to the strong appreciation of the Brazilian real in the first quarter of the year. I'm going to explain next in more detail where it comes from. And then finally, in terms of cash and net debt, Aura closed the first quarter of the year with a strong cash position of $194 million, coming from $161 million at the beginning of the year. That's also a combination of free cash flow from operations and also FX gains. And in terms of the net debt, also a significant improvement in this first quarter of the year, a negative net debt of $29 million or $29 million net cash position at the end of first quarter. And we bring here a pro forma analysis, what would have been the net debt at the end of the quarter, excluding Gold Road. We can see the net debt would have been $54 million. And in relation to Gold Road and the creditor are negotiating, are making progress in the negotiation, and we expect to complete the divestments from Gold Road in the short term, in the next month or so. And then on the next page, we can see a bridge between adjusted EBITDA and the net income for the first quarter of the year. As we saw previously, adjusted EBITDA was $49 million in this first quarter of the year. We highlighted the strong performance of Aranzazu, which reported $34 million in EBITDA. On the other hand, EPP came weaker than usual, as Rodrigo was explaining, that was expected in part of the mining sequencing. We were already expecting a weaker EBITDA from EPP in the first and second quarters of this year, and a stronger second semester. That's already was considered for our guidance that was disclosed earlier this year. Amortization, depletion, and finance expenses of $9 million and $3 million respectively came in according to our expectations and consistent with what the company reported in the very few quarters. An FX gain of $12 million, the one we saw on the previous slide. Where does it come from? Where it comes from, that comes mainly from cash and cash equivalents held about Aura Almas. As Rodrigo explained before, Aura Almas made already most of the commitments to build the projects. Almost 6% of the capex has already been committed, and another 20% is expected to be committed in the very next few weeks. So, and most of the capex is in Brazilian reais. Because of that, Aura Almas is holding most of its cash in Brazilian reais. And due to the strong appreciation of the real, coming from 5.58 reais per dollar at the end of the year to 4.73 reais per dollar at the end of the first quarter, we see a gain when we translate that cash from reais to dollars and consolidating our financial statements. Income tax expenses of $10 million, mainly from Aranzazu, which reported very strong results, and San Andres, bringing the net income at the end of the quarter to $39 million. And then on the next page, so on this page, we also use to bring to you the tail analysis and the managerial view with the detailed analysis of the change in the cash and cash equivalents of the company throughout the quarter. As you can see in the very far left side of the page, the bar in red was the cash position at the beginning of the year of $161 million. Then on this left side of the page, there is one analysis that we call the adjusted free cash flow to firm. That is the free cash flow generated by the operations without including investments to grow the company. That portion of the business in the first quarter generated $26 million. Then more in the middle of the page, what we call the investment for growth, which is what the company is investing in exploration to increase the reserves and resources and the life of the mine of the company, in investments in projects, and mainly in the construction of farms. That portion of the business consumed $13 million of cash in the quarter, and then more to the right, more financial items like interest expenses paid, these liabilities. We had proceeds from debt and debt payments related to the liability management program. As Rodrigo presented at the beginning, we have been able to reduce the cost of that at Apoena with new credit lines. And then we see again the FX gain on cash and cash equivalents, bringing the cash position to $194 million at the end of the quarter. And with this, we end our presentation and open to questions. Thank you.
Thank you, Kleber. I already have a few questions here, and I'll start with some questions that is also here for you. The first one is Caio from BTG. He says, good morning. Can you give me a little more color on the $6 million advance repayment to Trafigura? Is there more to come? So, Kleber, you can answer this.
Yes. So, Caio, Trafigura is our client in Mexico who buys our concentrates. Aranzazu received a $6 million advance payment last year in order to pay a debt with the previous clients. And this advance was expected to be settled with shipments over the first 3 months of 2022. So that advance was full paid in the first 3 months of 2022, and we don't. So answering your question, you're not going to see that in the next few quarters.
Thank you, Kleber. There's another question, 2 questions actually, that is more related to the cost. Andre Vidal also asking about the effect of diesel on our cash costs. The diesel on our cash costs ranges from 5 to 10% overall. Although we've been seeing some increase on diesel, we've been able to mitigate that through a few different initiatives that is already accomplished, and a few others that will be accomplished in terms to gain productivity and also offset some of those inflation pressure. We don't expect significant higher costs due to inflationary pressure during the next quarter. There's another question here from Diego about the $25 million in Gold Road debt accrued. Is there a forecast when the impact of the net cash that will happen? Is there any risk that Aura will have to pay this amount? No, there's no risk that Aura will pay this amount. This is a no-recourse project finance that the debt holder understood very well that the parent company would not provide guarantee. We would try to make it Gold Road that happens, but if not, we would have to stop the amortization, and then we would transfer back Gold Road to the debt holder. So that is underway as we speak. We expect to finish this transfer debt holder of Gold Road, and together with the $25 million during this second quarter of 2022. There's another question from Tel Meireles. Most of the companies are paying dividends from Q1 to 2022. Do you tend to pay more dividends on the short term, as the last one we paid was by the end of 2021? We have a policy of 20% of EBITDA minus recurring capex. We will maintain this policy. We will pay dividends reference to the results of during the year of 2022. Our policy, it's one payment per year. Although last year we had excess cash and we considered paying that 2 times. We paid on the first semester and then we paid in the second semester. We will constantly monitor and see the alternatives to distribute excess of cash during the whole year. There's another question about Borborema. Once we know that the close is in July and it's already licensed and more advanced than Matupá, it's possible to expect revenue from this project in 2023, if not, in which month of 2024? We will access and we will analyze all the re-engineering the project during the second semester this year after we close, and then we will see when we could start the production. Of course, we always try to start construction as soon as we can. If we can start construction in 2023, we would probably do. We would think if we should do at the same time of Matupá, or at least have 6 months or 12 months difference from Matupá to Borborema. We will discuss this during the second start Matupá. Should we start Borborema? Should we start both together, or have a 6-month or 12-month delay between them? Those discussions will happen during the second semester, and then we announce to the market as soon as we have the decision. There's another question that we have a very clear target to reach 400,000 ounces by 2024, but we don't have a clear target for 2023. We will release the target for 2023 during until the end of the year, when we release the production target for the following year. Although next year we already know that we have production from the current operations, and next year we have a new production coming in from Almas that starts production during the first semester, full production during the early second semester next year. So we will see an increase on our production coming also from Almas. There's another question here for you, Kleber and Taylor Red Cloud. Could you explain a bit more on the 21 million proceeds from debt for the quarter? What's the use of proceeds on this? Also, what's the outlook for recoveries? I can later. Go ahead. There's another one.
Yeah. So Taylor, the 21 million was raised by EPP. So EPP has close to $6 million in gross debt, and we are under a liability management program to trying to increase the terms and improve the costs. So you saw there was a 21 million proceeds, and already close to 30 million payments. Some more payments are going to come. That's part of the liability management. We're changing more expensive and shorter line for cheaper and longer credit lines at EPP.
So there's another question from stock repurchase program. The company has not yet started to repurchase. How's this process going? We did not start the process of repurchase because we were mostly in blackout period since we approved the program. First, we were engaged on the acquisition of Big River, and now we had the results to be released. So we should start the process soon as we clear all this blackout period. The last question I have here is, how do we see extraordinary dividends versus growth equation following the Big River acquisition? Is it correct to assume that the company will only pay minimal dividend back in 2022. We will access this during the second semester. During the second semester, we'll see what are the optimizations that we can do in Big River, when we could start the construction of Big River, if we do together or we delay 6 or 12 months to Matupá. As you know, projects Almas Matupá has a very short term, very short payback, so that does not consume significant to our balance sheet. So we continue to produce cash even after investing individually in those projects. During the second quarter, we will have to access and see how we would proceed with the dividends and share buyback. Again, if we feel that we have excess of cash, we will pay to the shareholders. If we feel that next year, the construction of both, if we do both at the same time, will consume more of the cash, then we will access. But the 20% of EBITDA minus recurring capex is on our budget to be paid during the year. There's a final question is that he see the whole market is having a decrease on share price and everyone is struggling, but he sees Aura struggling more than the average of the market. And why do we see this? We believe that what is happening is small caps. If you compare Aura to other small caps, we've been struggling more than the average of the sector. Most of liquidity when you have people exiting the investments or funds that need to adjust its portfolio exiting. The shares, we struggled a little bit more, but it has gone far beyond the fundamental, and we hope to provide and continue. We will work to continue to increase our growth. So we have more than 50% increase until 2024 with Almas and Matupá. If you put Borborema in between, we have another 80, we have a new 30, 35, 40% increase. So we are very in line in the past to be at 500,000 ounces in the next 2 or 3 years. That's what we will focus, producing cash flows, growing, and in the meanwhile, increase the daily trading volume. We are at $2 million per day. We want to be between $5 to $10 million. That will mitigate significantly this volatility in our shares that we've been seeing during the last couple of months. So overall, I thank you all for participating on this. Our presentation is on the website. Take a look on that. Also, Gabriel, our head of investor relations, is available if you have any questions, a message that he can answer and instruct to you more about our company and details of the results, and also our projections for the year.
Thank you very much. Thank you all.
Thank you. Bye-bye.